When people start whispering that gold is a ticking bomb into 026, I can't help but smile. Because I've lived through more market panics than most investors have lived birthdays, and I've watched fear dress itself in dozens of different costumes. But gold has always been its favorite disguise. I remember sitting in my tiny Omaha office in the late 1950s, flipping through annual reports with a cheap pencil tucked behind my ear, thinking to myself, why do smart people keep betting their future on a metal that doesn't create anything? And decades later, the pattern never changed. When emotions rise, logic falls, and investors rush toward something that shines instead of something that earns. The truth is, gold doesn't produce cash flow, doesn't employ workers, doesn't innovate, doesn't grow, and certainly doesn't solve financial instability just because its surface reflects light. But what does happen every single time is that fear builds narratives faster than fundamentals can correct them, and the moment a headline promises safety, crowds surge toward it without asking the only question that truly matters: what value does this asset create in the real world? I've seen gold manias in the 70s, the spikes after crises, and the countless predictions that this time is different, but sooner or later the same realization arrives like a cold wind. Gold is a psychological instrument, not a productive one, and when enough people mistake sentiment for strategy, the metal becomes a fuse, not because it will explode upward, but because eventually confidence snaps, liquidity dries, and the crowd finds out that the shiny refuge they ran toward is just a silent, motionless bar that never promised to save them. And if you want the truth, the ticking sound people hear in 2026 isn't gold, it's the clock counting down to the moment when investors remember that wealth is built by owning things that make money, not things that sit still. The first time I truly understood the danger of relying on gold was during the inflation panic of the 1970s, when people lined up outside bullion shops the same way they line up for the newest phone today. Except back then it wasn't excitement that drove them, it was fear. And fear is the most expensive emotion an investor can have. I watched families convert their life savings into coins they buried in backyards, convinced that society was one headline away from collapse. And yet, a decade later, many of those same people quietly sold their gold at a loss because the crisis they prepared for never came and the opportunity cost of doing nothing had eaten their future alive. That taught me something crucial. It's not gold that destroys wealth, it's the belief that owning gold alone is a strategy. It isn't, it's a stall. It's procrastination dressed up as protection. And now in 2026, with the same cycle of uncertainty, geopolitical tension, and speculative whispers, you can practically feel the air tightening as investors convince themselves that the metal will rescue them from problems that require decisions, not talismans. The irony is that the real ticking bomb isn't the price of gold, it's the moment people realize they've parked their money in an asset that does absolutely nothing while inflation, innovation, and compounding march forward without them. Meanwhile, businesses innovating in energy, logistics, AI, autonomous systems, and global infrastructure are quietly growing, hiring, building, and earning all the things gold has never done and never will. Whenever someone tells me gold is safe, I ask them, safe from what? Not from time, not from missed opportunities, not from stagnation. What most people call safety is really just comfort, and comfort is the single most dangerous thing in investing because it makes you feel calm while your net worth quietly starves. What's coming in 2026 isn't a golden explosion, it's a wake-up call. And most investors won't hear it until it's already too late. I learned early in my career that markets don't punish people for being wrong, they punish people for being certain about the wrong things. And gold is the perfect example of how certainty becomes a trap. Because the moment an investor believes an asset is untouchable, they stop questioning it, stop analyzing it, and stop thinking critically about what actually moves value in the real world. And that's when wealth quietly evaporates. Back in the early 1980s, I remember talking with a farmer in Nebraska who had converted nearly every dollar he had into gold after hearing radio hosts predict the financial system would crumble within 5 years. And he told me something that has stayed with me for decades, Warren. At least gold can't go to zero. I nodded politely. But inside, I thought, neither can a barn full of rocks, yet nobody calls that an investment. The difference between assets and beliefs is that assets work for you, while beliefs require you to work for them, constantly defending them, justifying them, and ignoring the evidence piling up at your feet. And the greatest misunderstanding of 2026 is that the global instability we're witnessing somehow transforms gold from a passive metal into an active solution, but it doesn't. It hasn't in the past 100 years, and it won't now. What actually happens when uncertainty rises is that liquidity dries up, leverage unwinds, and overconfident investors holding non-productive assets suddenly face the one question gold has never been able to answer: what now? Because when bills come due, when obligations tighten, and when real economic shocks ripple through the system, the people who survive are the ones holding businesses with cash flow, pricing power, and adaptability, not bars locked in safes, not coins in drawers, not ETFs backed by something that sits in a warehouse accumulating dust. And this is the part that rattles people the most. Gold doesn't fail dramatically. It fails quietly, slowly, invisibly. It bleeds you through decades of opportunity loss, through the compounding you never received, through the innovation wave you never rode, through the wealth you never let grow. And that's why I call it a ticking bomb, not because it will blow up your portfolio all at once, but because one day you'll wake up, look around, and realize that the world moved forward while your money stayed frozen in time. Shining but silent, beautiful but useless, present but never working for you. If you really want to understand why gold becomes dangerous in years like 2026, you have to stop looking at the price chart and start looking at human behavior. Because gold's value is driven far more by psychology than by economics. And psychology is the most volatile market force we have. I've watched investors cling to gold the same way a drowning man clings to driftwood, not because it will take them somewhere, but because it feels better than swimming. And every time global tension rises, every time inflation whispers, every time a central bank clears its throat, people run back to that driftwood. But the truth is, if you map out every major gold spike of the past century, what you'll notice is that the metal rises sharply during fear, then stalls, then sinks while productive assets soar. The danger isn't the spike, the danger is what happens after. I've had folks come to me after crises saying, "Warren, I thought gold would keep running," and I'd point them to history. Gold surges when the world panics, but it stagnates when the world rebuilds. And the world always rebuilds. In 2026, when investors talk about gold as a ticking bomb, what they're actually hearing is the sound of collective expectation building pressure, the belief that gold will do something dramatic simply because people are frightened. But markets don't reward emotion, they exploit it. And the moment the fear cycle unwinds, the moment inflation cools, or growth resumes, or risk appetite returns, gold doesn't have anything left to justify its premium. Meanwhile, across the landscape of real businesses, CEOs are innovating, teams are solving problems, capital is compounding, and the enterprise value of productive assets is expanding like oxygen filling a room. That's where wealth grows, where something alive is happening. And that's the trap. Gold gives you the illusion of safety without the substance of progress. You feel good while you're standing still, right up until the moment you realize everyone else has moved ahead. That's the true ticking sound, not a crisis, but the cost of time. Because time is the only currency you can turn back. And gold is the only investment people defend even as it quietly steals that currency from them year after year. One of the biggest misconceptions I see in 2026 is the belief that gold somehow becomes more useful the more uncertain the world feels, as if fear magically transforms it into a generator of wealth. But usefulness in investing has never come from sentiment, it comes from utility. And gold has the same utility today that it had 1,000 years ago, nearly none. I've said many times that if you put all the world's gold in one big cube, it would sit there looking impressive and doing absolutely nothing. While for the same value, you could buy every farm in the United States, plus a few major corporations on the side, each of which would generate food, jobs, innovation, dividends, and real productivity, in other words, life. And yet people still choose the cube. Why? Because gold stimulates the emotional part of the brain, the part that craves certainty, the part that hates volatility, the part that wants a simple answer to complex problems. But simple answers are the most expensive mistakes in finance. I remember an investor who once told me he was moving everything into gold because he was tired of thinking. He didn't want to study businesses, analyze earnings, monitor market cycles, or understand competitive moats. He wanted an asset he could lock away and forget. But the market never forgets. Every year he sat in gold was a year he missed out on compounding, and compounding is the closest thing we have to financial magic. If you remove yourself from that process, the world compounds without you, and that gap only widens with time. And the irony is that investors think gold protects them from chaos, but what it really protects them from is growth, because chaos ends, crises end, drawdowns end, but lost compounding never comes back. That's why the ticking bomb metaphor is so fitting, not because gold explodes, but because time does. With every month, every quarter, every year that capital sits idle, the opportunity cost intensifies until one day the investor wakes up and realizes that the future they were trying to protect has already been eaten away by the false safety they trusted. Gold doesn't crash violently, it lets your potential crash instead, quietly, invisibly, relentlessly. The strangest thing about gold in 2026 is that people treat it like an anchor in a storm. But anchors only help when you're trying to stay in the same place. And staying in the same place is the exact opposite of what wealth requires. Real wealth demands movement, adaptation, innovation, and participation in the engines that drive human progress. Yet gold sits there as still as the day it was mined, offering you nothing but the illusion that stillness equals safety. I've watched entire generations fall for that illusion. And it always starts the same way: a little inflation, a little tension overseas, a few alarming headlines, and suddenly investors who spent decades building smart portfolios start liquidating productive assets to chase a narrative that has never, in any era, created long-term prosperity. And that's what worries me most in 2026, not gold itself, but the mindset it promotes, the mindset that says I don't need to understand business, or innovation, or competitive advantage, or economic cycles. I just need something shiny to make me feel protected. But investors who seek comfort instead of clarity are the first ones to lose their footing when the world shifts. Because comfort never prepared anyone for the future. I remember telling a young fund manager once that investing is like planting trees, the shade comes decades after the hard work. And the people who plant bars of gold instead of seeds never get a forest, only a vault. And that's exactly the tragedy unfolding now, while entrepreneurs push the boundaries of AI, while energy systems are reinvented, while infrastructure is modernized, while new industries are born out of ideas that didn't even exist 10 years ago. Millions of investors are locking their money away in something that fundamentally cannot grow, cannot adapt, cannot evolve. And when they call gold a ticking bomb, what they're sensing, often subconsciously, is the widening gap between the world that is accelerating forward and the asset they're clinging to that is permanently frozen in time. That gap is the danger. That gap is the explosion. It's not about volatility or price movement. It's about waking up a decade from now and realizing that everything around you advanced except your wealth. And the bomb that went off was simply the blast of missed opportunity echoing through your financial future. The funniest thing is that people in 2026 keep repeating the same line: gold has stood the test of time, without ever asking what that actually means, because yes, gold has stood the test of time, but it has done so by standing still. And standing still is not a virtue in investing, it's a warning. Every productive asset in history has changed, evolved, adapted, reinvented itself, faced competition, innovated, and fought for relevance. Gold has done none of that, and somehow that passivity gets marketed as reliability, when in reality it's stagnation wearing a crown. Investors forget that survival is not the same as performance. A turtle can outlive a racehorse, but I know which one will get you somewhere. And when people talk about gold as a safe haven in 2026, they're really saying they don't want to engage with the complexity of the modern world. They don't want to analyze supply chains, or understand AI models, or evaluate business moats, or think about pricing power, or follow earnings reports. They want an escape hatch disguised as a strategy. But no escape hatch has ever built a fortune. I've met hundreds of investors who told me gold made them feel calm, but I've never met one whose long-term wealth was defined by it. And here's the truth that makes some people uncomfortable. Fear is a beautiful salesman. It convinces intelligent people to abandon logic, abandon discipline, abandon opportunity, and flock toward anything that promises psychological relief. Gold doesn't have to produce value, fear does the marketing for it. But as soon as stability returns, as soon as markets normalize, as soon as rates shift, as soon as innovation resumes its climb, the illusion fades and investors are left holding something that never had the ability to build their future in the first place. The ticking bomb, in this sense, is the moment when the comfort wears off and the math shows up, because the math is merciless. Money that doesn't compound shrinks relative to everything that does. And the world in 2026 is compounding faster than at any point in human history. So when someone asks me why gold is dangerous, I tell them it's not dangerous because it collapses. It's dangerous because it quietly convinces you to sit out the greatest wealth building era we may ever see. And by the time you realize that, the bomb isn't about gold exploding, it's about you missing the explosion of progress happening everywhere, except in your portfolio. What most investors don't understand in 2026 is that gold's greatest danger isn't its volatility, it's its predictability. Because gold behaves exactly the same way every cycle. It rises on fear, plateaus on confusion, declines on recovery, and stagnates during expansion. And yet millions of people keep acting like this time the pattern will magically reverse, as if the metal will suddenly start generating earnings, creating innovations, or participating in the economic engine simply because the headlines feel dramatic. But investing doesn't care about feelings. It cares about productivity, and gold is the least productive major asset you can own. I've met countless people who told me, Warren, at least gold is honest, it doesn't lie, and I agree, but its honesty is what scares me. Gold tells you the truth up front. I will sit here. I will shine. I will not grow. I will not innovate. I will not compound. I will not build your future. I will simply exist, and people still hand over their life savings to it, believing existence is enough. But existence is not performance. Existence is not a retirement plan. Existence is not a financial strategy. And when people describe gold as a ticking bomb, what they're really describing, often without realizing it, is the moment when they wake up to the opportunity cost. The moment when they compare a decade of gold ownership to a decade of compounding inequities, or businesses, or innovation-driven industries. And the difference is so vast it feels like an explosion. I once spoke with an investor who kept gold for 20 years, proudly insisting he'd preserved his wealth, until we compared the numbers to what he would have earned owning even the most modest index fund, and the look on his face said everything. Gold didn't protect him. It quietly impoverished him relative to the world around him. And that's what people are sensing in 2026. Not imminent catastrophe, but the widening gulf between static capital and a dynamic global economy sprinting forward. The bomb isn't in the gold, it's in the timeline. Every year that money refuses to compound, it falls further behind a world accelerating with unprecedented speed. And when the realization finally hits, when people see how far they've drifted from where they could have been, that psychological blast is far more devastating than any market correction gold could ever face. The real problem with gold in 2026 is that it encourages investors to outsource their thinking to their emotions. And once you hand your financial future over to emotion, you're no longer making decisions, you're reacting. And reacting is the fastest path to long-term underperformance. I've seen it for decades. People don't buy gold because they understand it. They buy it because they're tired of being afraid, tired of uncertainty, tired of volatility, tired of watching headlines shake their confidence. And gold offers a seductive promise, the promise that you can stop thinking, stop analyzing, stop evaluating risk, and simply wait things out. But waiting is not a strategy. Waiting is a stall, and stalls destroy momentum. In 2026, the most dangerous thing about gold is that it gives people an excuse to disengage from the very forces that create wealth, innovation, productivity, compounding, and long-term ownership of businesses that actually build the future. Instead of asking, which companies are solving the hardest problems? Which industries are expanding? Where is human ingenuity pushing boundaries? Investors retreat into the comfort of a metal whose entire value proposition is that it doesn't change. But the world is changing faster than ever, and wealth follows change, not stagnation. I remember a conversation I had back in the early 2000s during another gold rush with an executive who pulled every cent out of tech after the dot-com crash and threw it into gold, convinced he was making the smart, conservative choice. 10 years later, gold had done its usual drift, while the survivors of that tech crash, companies that rebuilt, innovated, refined their models, had multiplied in value many times over. He told me, "Warren, I was so focused on avoiding pain that I avoided progress." That line stuck with me. And that's exactly what millions of investors are doing in 2026. They're not protecting themselves. They're protecting their fear. And fear has a terrible return on investment. When people call gold a ticking bomb, what they're really sensing is the pressure building between what their money is doing nothing and what the world is doing everything. That pressure doesn't explode outward, it implodes inward. It shows up in retirements that fall short, dreams that shrink, opportunities that pass by, and decades of compounding that never happened. And the saddest part is that so many people will look back and realize that the bomb they feared was never in the economy, it was in their decision to sit still while the world moved forward without them. In 2026. The most unsettling truth about gold is that it thrives on the illusion that doing nothing is somehow safer than doing something. And that illusion has cost investors more wealth over the past century than any market crash, recession, or geopolitical crisis combined. Because the human mind is wired to mistake inactivity for protection, even when inactivity is the very thing that guarantees decline. I've watched countless investors over the decades cling to gold because it feels neutral, because it feels like a pause button, but markets don't have pause buttons. Time doesn't have a pause button. Compounding certainly doesn't have a pause button. And when the world accelerates, when technology leaps forward, when industries reinvent themselves, when productivity rises, when capital flows into new breakthroughs, the investor sitting in gold isn't staying still. He's falling behind at an exponential rate. That's the part nobody wants to confront. They imagine gold as a bunker, a shelter, a hideout, but the truth is that bunkers don't protect you from time, they only isolate you from progress. I remember speaking with an old friend who lived through the 1987 crash, the dot-com collapse, the '08 meltdown, and every spike of global tension in between. He told me once, Warren, the only time I ever felt truly safe was when I owned gold. And I replied, that's exactly the moment you were in the most danger. Because safety in investing doesn't come from calm feelings, it comes from productive assets that consistently earn more than they cost. And gold has never been one of them. Investors forget that the same fear driving them toward gold is the fear that keeps them from participating in the very growth that builds fortunes. They forget that the world doesn't reward hesitation, it rewards contribution. Meanwhile, in 2026, sectors like AI-driven logistics, precision manufacturing, biomedical engineering, autonomous energy grids, and next-generation computing are compounding value at a speed we've rarely seen in history. And yet millions of people are locking their money inside vaults, believing that the ticking bomb is inflation or instability, when the real ticking sound is the clock counting how many years they're forfeiting to stagnation. Gold isn't an explosive device. It's a silent drain. It's the financial equivalent of stepping out of a race while insisting you're staying competitive. You can't win a marathon by refusing to run. And the sad irony is that the very people who buy gold to escape uncertainty eventually face the greatest uncertainty of all, the realization that they've trapped their future inside a metal that never had the power to move them forward. That's the moment the bomb goes off, not with a bang, but with the quiet, devastating clarity that the world went somewhere. And they didn't. And if there's one lesson I hope investors finally understand in 2026, it's that wealth isn't built by hiding from the future, it's built by engaging with it, participating in it, and owning the engines that drive it forward. Because every dollar you place into a productive asset is a vote for progress, while every dollar you freeze in gold is a vote for fear. And fear has never produced a dividend in the history of mankind. I've lived long enough to see every kind of panic, every kind of mania, every kind of crisis, and through all of it, the people who came out ahead weren't the ones who clung to what sparkled. They were the ones who kept their heads clear, their discipline strong, and their capital working. In 2026, gold isn't a ticking bomb because it will explode upward or collapse downward. It's a ticking bomb because it distracts you from the compounding, innovation, and growth happening everywhere else. And one day, maybe 5 years from now, maybe 10, you'll look at the charts, look at your savings, look at the world, and realize that the cost of inaction was far greater than the cost of any market volatility you tried to avoid. That moment of realization is the explosion. And if you take anything from my decades of experience, let it be this: don't build your future on something that refuses to grow. Build it on something alive, something productive, something that reflects not fear but confidence in human ingenuity. Because that, more than anything, is what has created every fortune worth studying. If you want real safety, choose growth. If you want real protection, choose productivity. And if you want real wealth, choose the future. Now, if you found this message valuable, Make sure you subscribe and leave a like. It helps more people avoid the traps that hold them back and keeps this kind of insight coming your way.